to the What Bitcoin Did podcast.
Hi there, how are you all? I hope you all are having a great week. Welcome to the What Bitcoin Did podcast. Thank you for all the amazing feedback I've had on last week's show with Jake Javinsky. I think you'll all agree, well, anyone who listened to it, I think you'll agree he did a cracking job. It was great to have him on, and he's also recorded another podcast with Pomp. I recommend you check that one out too. It's also another amazing episode. This week, I've got another cool episode. I know I say this all the time, but this one is definitely one of the best. I have got my first two guest interview with the author of The Bitcoin Standard, Saifedean Ammous, and Wall Street veteran Caitlin Long, two of my absolute most favourite people in the world of crypto. Two people I've wanted to have on the podcast, and getting them on together is obviously something very special. So before I talk about that, though, I do have a message from my show sponsors, and please do listen to this. Don't just skip forward. So I want to talk to you again about BlockFi, who've been advertising on the podcast for a while now. They offer crypto-backed loans. If you're holding on to crypto, you can put your Bitcoin and Ether to work without selling. BlockFi gives cryptocurrency owners access to cash through a lowest cost cryptocurrency to dollar borrowing. BlockFi have also created a special offer to my listeners. So if you sign up at blockfi.com/whatbitcoindid, you will get $25 in free crypto added to your collateral balance for loans under $10,000, or $50 in crypto for loans over $10,000, and applying only takes a couple of minutes. BlockFi is spelled BLOCKFI, and it's blockfi.com/whatbitcoindid. Okay, so let's move on to the interview. It's a cracker. I absolutely love this. A bit nervous doing it up front. You know, I'm up against two absolute heavyweights, an author, a Wall Street veteran, two people who know so much about crypto and the economy. I had to do so much research to try and pull together some kind of framework, but I think it came out great. I'm really pleased with this. And look, the reason I wanted to get them both on together is they reference each other a lot. I've been following Caitlin for a while. I've been listening to a lot of her interviews. I've also been following Saifedean for a while, read his book, read his bulletin. And when Caitlin was on Marty Bent's show recently, she referenced Saifedean, and Saifedean referenced Caitlin in his latest bulletin, which, by the way, if you haven't subscribed for, you must do it, and I'll add that in the show notes. But I wanted them to have them on together. They've done separate interviews, but I thought it would be really good to bring both of them together on the show, as they share a lot of similar ideas on Bitcoin. And I thought by having them together, we could go into detail on some very important topics, such as the state of the global economy and government balance sheets, what negative interest rates mean, why growing debt might be the perfect storm for Bitcoin, and the implications of Wall Street adopting Bitcoin, which is something they've both talked about recently, especially with regards to the threat of fractional reserve Bitcoins. So having them on together, I could put a whole bunch of topics to them and listen to their answers, let them debate it out, and I think it turned out pretty good. So I hope you enjoy this. As ever, I'd love your feedback. Do get in touch. Do let me know what you think. Just a note, there is a few sound issues at the start. Just the first couple of minutes, we had a problem with a rogue set of headphones, but we managed to fix this, so that's just at the start. Okay, before we move on to that, please do support the show. And yes, a big thanks to my first patrons. I've got, I think, 12 now signed up, which is very, very cool. And please do consider this. Don't just skip past. Go and check out my Patreon page, which is at patreon.com/whatbitcoindid. Anyone who does contribute to this, like the advertisers, are helping keep the show going, because this is pretty much all I do now. And I've got a bunch of options. The first one is just a basic $2 option that gets you access to the Patreon feed. You can come in and discuss things like previous shows. $5 will get you an early version of the show. So this week's show actually went out on Tuesday to patrons. So if you want to get the show early, you can sign up for that. You can be a WBD maximalist. That's $25, and that allows you to help me prepare for shows. You can get involved in the framework creation, which is really cool. And there are also a couple of advertising options. So yes, please don't just jump past this. Please do consider it, because it is important for me. And you can check it out at patreon.com/whatbitcoindid. And the other things you can do, if you're a regular listener, you know what they are. You might have done them already, but if you haven't, please do go and leave me a review on iTunes. I might have a few negative ones from Ripple cultists this week, as I've been teasing them, so I might need some of you to go out and give me a good review on iTunes. A 5-star would be great. Please follow me on social media. I'm at WhatBitcoinDid on everything, on Medium, on Instagram, on Twitter, and if you reach out to me, I'll probably reply to you. And if you haven't seen it yet, every Friday I'm now doing a tweet storm of other podcasts I'm listening to, just a summary of the best ones I find, so take some time to check that out as well. Okay, so on to the interview. I do hope you enjoy this. Please do feel free to reach out to me if you have any questions, any thoughts on the interview. My email address is hello@whatbitcoindid.com, and I pretty much reply to anyone, so feel free to get in touch. It's afternoon here in London, so good afternoon, Saif. Good afternoon, Caitlin. I'm not sure what time it is there for you, but thank you both for coming on the show. Could you both just introduce yourself and then obviously let me know why Bitcoin is so important for you before we start talking about more of the juicy subjects?
Okay, well, I'm a university professor in the Lebanese American University in Beirut in Lebanon. I've been in this job for about 9 years, and I've been interested in Bitcoin for 7 or 8 years of those. I've been researching it from an economics perspective because I came at it from the perspective of an Austrian economist, because that was what I was interested in studying for a while. And recently I published the Bitcoin Standard, which is basically the summation of all the Austrian ideas that I'd worked on over the past few years.
And I'm Caitlin Long. I've been involved with Bitcoin dating back to 2012. Wall Street background, left Morgan Stanley where I had been running a business on the pension side in 2016, spent 18 months at Symbiont, which is an enterprise blockchain company. And this year left that to work on passion projects in Wyoming, my home state, my native state. And we got 5 blockchain friendly bills passed in Wyoming. And just finished a hackathon, headed back out there for another legislative task force meeting where we're going to be hopefully putting even more favorable blockchain legislation through the state of Wyoming.
Great. And I think it's good to bring you both together. In both your work, I've noticed you mention each other. Most recently in your bulletin, Saifedean, you mentioned Caitlin. I'm struggling to find where you might disagree on things. That was the thing. I think possibly the only areas that Saifedean with you, everything apart from Bitcoin is a shitcoin, whereas Caitlin, I think you're a maximalist, but because of the work you're doing, obviously, with the Wyoming Blockchain Coalition, I guess you're exposed to other non-Bitcoin items.
Sure, yes. I'll go first. I suspect that we don't disagree on a whole lot. In fact, actually, when we first connected, when I gave a speech to the Mises Circle in San Francisco about the future of money, and a big chunk of that speech, it was in April or May of this year, a big chunk of that speech was telling every Austrian that Saif's book needs to be in their library and explaining why. In fact, I remember saying, I don't even know how to pronounce his name, but my mentor in Austrian economics had sent it to me and said, this is the book that I wish I'd written. And when I read it, I fully agreed. And it doesn't need to be written because Saif did it.
Okay, so I just want to set the picture just on a personal level and from what my podcast is about. So 2 years ago, I was working in advertising, standard life, earning my money, putting it in the bank, saving a bit for my pension, and going on holiday once or twice a year with my children. And now, 2 years on, I found myself in this world of Bitcoin where everything I know has been turned upside down. Everything I know about the government, money, economics. And if anything, there's a huge amount of fear. And I think, obviously, there's a great opportunity with Bitcoin. It's becoming the work of your lives. But how do you think we raise awareness with what's happening with the global economy with people like who I used to be?
Okay, well, the way that I see it is these sort of things, these sort of questions I used to think about much more before Bitcoin. Before Bitcoin, you used to have this compelling desire to tell people, this isn't how things should be. We could be living a much better, healthier life with a lot less conflict, war, destruction, if we separated the monetary system from the government. And you start alienating your friends because you never shut up about this. But Bitcoin for me is one beautiful thing about it is that you don't have to tell people anymore. You don't have to argue with people anymore. It's just economic reality that is imposing itself on people, so that people who don't care about any of that stuff, who don't even think that separating money and government is a good thing, are still getting into Bitcoin because it's just much better as a store of value. And so I think, it's beautiful to not be in a position where you need to keep arguing theoretically with people. And I like the fact that Bitcoin just imposes its economic reality, and then people keep adopting it. And so I think it's going to teach people proper economics once they start really realizing the impact that it has on them in terms of how they lower their time preference. They start thinking more of the long run. And then when they start imagining or seeing how a new economy is being built online around Bitcoin and around Bitcoin-based transactions, it's going to offer a much more compelling alternative to the current government-dominated monetary and financial system. And I think that it will just speak for itself. It won't need us to evangelize it.
And I think people know something up, but they're not sure what it is. You know, amongst my circle of friends, people have got no money, they've got no savings, they can't put anything towards their pension, they've got children going to university about to embark on an experience that's going to lead to a lot more debt for them, not knowing how their children are going to afford houses. And I get the feeling people know something's up, but they don't know what it is. What are your views on that, Caitlin?
Oh, I completely agree. I've been saying that for years as well. Back when I was working with corporate treasurers and CFOs, even they knew something was up. And one of the reasons why, when I laid out what was really an Austrian argument to them, of course, a lot of them said, "Oh my gosh, that makes so much sense," and they loved it because it was so contrarian to what they were hearing from the standard line. And it was interestingly, Morgan Stanley encouraged me to go do it because the client feedback was so great. They did not actually try to shut me down. And even though it was very, very critical of how money and credit are created in the economy, but it just, once I laid out the Austrian economic view, it makes sense. The light bulbs start going off for a lot of other people. I will say I was careful not to call it the Austrian view because that conjures up controversy. And if you lay out the substance without calling it Austrian, sometimes to people who are indoctrinated, maybe that's too strong a word, but people who don't know anything other than the standard economic line, they shut down. But the moment that you lay it out substantively, they get it and they realize, yeah, there really is something wrong, and it forces them to think through what might happen, in how this is going to play out. Everybody knows, except for the people, probably even the people who come out and say this is sustainable. Everybody realizes it's not, and so I think a lot of people just either have Stockholm syndrome and bought their own line of or alternatively, they're, they really don't believe it, but they're just so stuck in the groupthink, and to them, the cost of getting out of that groupthink is just too great.
And why do you think, Saif, that Keynesian economics propaganda has survived so long? Is it purely a construct of a government need to print money?
Yeah, it's the fact that government printing money makes it a sustainable cycle, in that, the government prints the money, finances the economics departments, and then the economics department teach that government should print more money. And so, as long as they both scratch each other's backs, that thing can continue until, that is, Satoshi shows up and then ends their sweet gig, just basically puts them out of business. The thing is, it's very hard to make that into an academic debate. When the precondition for participating in the debate is that you have to get effectively funded, published, and hired by institutions that get paid from the government. So, the notion of trying to argue the perspective of government doesn't need a role, it's not even, you don't even have to invoke some sort of conspiracy that keeps people out. It's just the nature of any government institution is that it won't be able to hire somebody who thinks it shouldn't exist. And so if you look at the debate that goes on within all government-funded universities, it's going to just naturally be biased towards that perspective, because that's how you get hired in that university.
And Caitlin, I saw on the Marty Bent interview, you talked about this government finance bubble. And a couple of things stood out to me as somebody, I don't really understand economics that well, but you talked, almost like you're talking about some huge mega crashes coming because the governments are running out of balance sheet capacity. And I interviewed Tua Demista, and he talked to me a lot about a bond crash. And then the last thing is you also talked about negative interest rates. And I was trying to understand negative interest rates in that I was thinking this just doesn't make any sense. But is that essentially a hedge against, is that almost like shorting money?
Yes, somebody's paying you to borrow, right? Which in a free market would never be the case when interest rates are negative, right? In a free market, they would never be negative because, to Saif's point from earlier, time preference is always positive, right? You'd always prefer to consume something today instead of having to wait until tomorrow, all else equal. And so why would you ever pay somebody else to wait until tomorrow? You wouldn't in a free market. So negative interest rates are purely a construct of the artificiality of the system. Tor's absolutely right. There is going to be a major bond crash. The challenge, though, is this could be years, if not decades away, or it could be tomorrow. The hard part is none of us knows. I look at it and say, when interest rates turn negative, it's a sign that the balance sheet of the country is pretty much done, right? Because to the extent that central banks can continue to lower interest rates toward that zero bound, then that suggests that the market says there's still some balance sheet in aggregate left in the country. Implicitly, what I think fiat currency value represents is that balance sheet. What I mean specifically by that is the amount of assets collectively owned in that economy that are not yet encumbered by debt. So if you think about a balance sheet, your assets, you're only solvent if you have positive equity. In other words, if your assets are greater than your liabilities. And when interest rates are negative, it means that in aggregate, the country's liabilities are probably greater than its assets. It just hasn't had that confidence, the crisis of confidence yet. But it's coming. And what's interesting in the U.S., I like to look at the 10-year Treasury bond yield. There's been an incredible downward trend of lower lows and lower highs for 30 plus years. I think it was 1982 is where that trend began. And literally every single time interest rates start to go up and the Keynesians say, the economy's turning, rates are going to go up, we're going to mean revert on interest rates. Every single time we never hit that previous peak before the wheels start coming off, because every time the Fed's tightening, financial conditions start to get tighter across the economy and the malinvestment starts to become revealed, right? So we have not yet broken that trend of lower lows and lower highs, even though rates, the 10-year, I think as of today is hanging right around 3%, might have broken through it. Last I looked, I think it had to break through 315. If it breaks through 315 as of a quarter end, which would be September 30th, then we might have actually broken that previous, that trend that started since 1982. But I laugh every time the mainstream economists come out and say, this is the time, interest rates are finally going up. We all know they have to go up. I don't disagree with them. We all know they will go up because they're artificially low. But every time the Fed starts tightening and the wheels start coming off somewhere in the economy, you start that downward trend again. And I don't think that trend is broken yet. And the reason I say that is because we're not at zero yet. And once we're at zero, that's when the balance sheet's done. And
is this almost like a perfect storm building for Bitcoin?
Sure. Absolutely. Yeah. And I do think that Bitcoin will resume its counter trend price performance against fiat currencies. It's been pro-cyclical with other financial assets in the last year as Wall Street money has started to come into it. So what we've had actually is a leaking into Bitcoin of all of this paper money that's been created. That paper money goes to where assets are cheapest. And right now, or at least, a year ago, Bitcoin was one of those cheap assets. And you started to see a lot of hedge fund money and high net worth individual money come in. And then you had the Bitcoin futures contracts from the CME and CBOE, which, by the way, right at that time was the top of the price of Bitcoin. Right. And ever since then, it's come down. But I think some of that easy money was leaking into Bitcoin's price in that run up to the peak last December.
And Saif, do you perversely enjoy this kind of market crash, this market narrative, because it is good for Bitcoin? You understand the question is because, everything that's happened in, let's say, failing economies, what we've seen in Venezuela and recently mentioned in Palestine and Iran and Turkey, I'm not sure how widespread use is, but the narrative is that Bitcoin is a lifeline. So do you perversely enjoy this?
I have to say, no, I don't. I'm not one of the people who, we call them doom porn, people who just fantasize about, the economic collapse and how it's going to vindicate them. I don't think of it in that way. But also, we have never seen Bitcoin under a financial crisis. We've seen there's definitely truth to the fact that its usage is increasing in Venezuela and Argentina. say, compared to countries where compared to countries similar to them where they wouldn't be experiencing those problems. However, we have no idea what a rich modern country going through a financial crisis would be like. And in fact, there's a lot to suggest that Bitcoin would likely crash during something like this, because when these financial crises happen, what you get is a flight to liquidity. People can't afford to hold money that is in high return, high risk assets, which is what they do during the bubble when the interest rates are low. So now people are speculating, people take risks, and so they put money in all sorts of crazy things, including things like Bitcoin and other digital currencies and so on. You can afford to do that when credit is easy because, you can borrow on your credit card at low interest rate, your house is at low interest rate, and you're getting paid and you have a job. Now, if there's a recession, interest rates might rise, so it's harder for you to borrow. And then you might lose your job, or your pay is reduced, or your income is reduced. All of that leaves less of a margin for speculating on high risk things, and so people would liquidate things like Bitcoin. But like we saw in 2007 and 2008, people liquidated highly risky debt assets and tried to go to dollars and gold in the financial crisis. So I think what's going to be really interesting about the next crisis is whether Bitcoin behaves as a speculative asset where people exit it towards safer, more liquid assets like the dollar and gold, or if it's going to behave more like a safe haven asset itself, where people will be exiting other things, particularly the altcoins and particularly digital assets, where people will start exiting that for the relative safety and liquidity of Bitcoin, which at the end of the day is at least nobody's liability and is much more secure than any of the other coins. And so, it's more liquid and it's more secure. And so most likely, if there's a big crash in the market, people are going to start taking their money out of the digital currency space. But if they're going to keep anything, they're going to likely keep it in Bitcoin. So the question now is whether we're going to be seeing a bigger flight out of Bitcoin than a bigger flight into Bitcoin. And I don't think it's settled one way or the other. And I think, we might end up seeing Bitcoin crashing very, very severely. It might drop below $100 or something like that. And it's not entirely out of the question. I'm not one of the people who thinks, Bitcoin can only go up. It could definitely crash. And we have no idea how it'll behave in a recession.
Can I add something? Because I think maybe we actually found a couple of things we might slightly disagree on here, but very slightly. I actually think that the price aspect of Bitcoin is the least interesting aspect of it right now because, it's really being driven by speculators. But your point about it potentially dropping to 100, I do agree with that, but with a subtle change, which is that everything's going to drop in dollar terms or in fiat terms when we hit that balance sheet wall. And the name of the game, I've always thought, is not your absolute return performance in your own wealth compounding. It's whether what you own falls less in value than your personal inflation rate. That's the real concept. And so to me, the absolute price of Bitcoin versus the dollar is kind of irrelevant as long as Bitcoin retains its store of value. There we would vehemently agree. As long as Bitcoin retains its store of value better than other assets, and it's one of many assets that I think will retain its store of value in that scenario better than other financial assets. But
exactly.
Yeah.
No, I mean, I think, it's going to be hard to disagree on this because I think it might take a while and it might be another few financial crises for this to happen. But I think in the long run, what's going to make Bitcoin continue to gain more of a monetary role is just that it's going to prove itself on the test of the market of this cycle of crises back and speculative bubbles. In other words, as you were saying, dollars will leak into Bitcoin because dollars are easy and money is being printed and people have low interest rate. But the difference is that, with every other asset out there, once money leaks into it and dollars leak into it and people start speculating on it and the price rises, it's possible for the producers of that asset to make more of it. It's true for housing, it's true for stocks, it's true for any kind of asset, any metal or gold, oil. Well, gold is the one that resists this the most, and that's why it was money, because it's the hardest to make. But Bitcoin is even hardest. is even harder than gold to make. And so even if we do witness a massive crash down to $100 with this crisis, I do expect it to just, because of the fact that nobody can make more of it, the recognition of Bitcoin, the people who have heard about Bitcoin are likely to just put it back on the map, and then more and more people will buy it, and then we're going to witness more and more of a rise in the price. And that, I think that resilience is going to illustrate to people how it is different from other kinds of monetary assets, that it could survive many, many crashes, and still nobody can increase the supply, and so the scarcity of it continues to prove itself on the market.
So it's almost important for people to have a diverse set of investments for whatever scenario may play out. Gold, own your house, Bitcoin, obviously a whole bag of shitcoins, right, Saif?
Of course, yes.
Well, we don't know, right? I think nobody really knows, and we don't know what the timing is. We don't know what the path is. There's an interesting book Saif and I talked about the first time we actually spoke to each other, which is a book called When Money Dies by Peter Warburton, I believe. And he's a historian, not an economist. And he wrote the history of the German hyperinflation. And to me, the most interesting lessons coming out of that currency collapse, how many head fakes there were as the currency was collapsing. We tend to look at hyperinflation graphs, and that the Venezuelan graph is now even more extreme than the German hyperinflation, because the inflation's been higher in Venezuela. But in order to see them, you look at them on a log basis, and what the log graphs obfuscate is just how many head fakes there were, where people were actually thinking that they were out of it because things had actually reversed and the currency appreciated. So, and really importantly, towards the end, you were seeing 20-30% intraday moves in the currency value against the French franc and also in the German stock market. Think about that, 20-30% intraday moves. Now, the businesses were not fluctuating in value 20 or 30% in one day. It was the currency collapsing that was happening. But that's a wonderful book for anyone who's interested in learning about what happens, because the path to currency collapse is not a straight one. And the markets have a way of really, throwing curveballs at you, thinking that we're finally over, we finally hit the bottom. And there's still, unfortunately, a lot more to come.
And do you think a currency collapse is inevitable with the dollar?
Oh, I do. It's just a question of when. And again, it could be 20, 30 years from now, because we still in the U.S. have balance sheet left over. I don't think this dollar, we're really on a euro dollar standard is what we are right now globally. And I don't think that that's going to end anytime soon. But there's a lot of evidence that it's fraying at the edges for sure.
So, but you've also said before that you think the euro has less based on its balance sheet, right?
When I say euro dollar, that's a financial market term that has nothing to do with the euro currency. Yeah. The euro dollar standard basically means dollars issued outside of the United States. Basically, the dollar is the world's reserve currency, and all dollar trade has to settle through the Fed ultimately. But foreign banks who have the ability to settle through the Fed actually can issue dollars. And in fact, during the financial crisis, we saw an awful lot of offshore dollars issued. That's what a euro dollar is. It's basically offshore dollars issued through foreign banks in the financial system, all of which still settle through the Fed. But it's not just U.S. banks that create that dollar-based credit. Foreign banks can do it too.
I thought you said with Marty Bent, though, that you think Europe has less capacity on its balance sheet.
Yeah, sorry, I didn't answer that specific question. Europe does. When I've done that math, there's a lot less. And by the way, you can see it in the evidence if you buy my theory that when interest rates are essentially at zero, the balance sheet's basically done. And if you happen to go to negative interest rates, it means that, you're pretty close to that confidence of a crisis of confidence moment. Look at Europe. Germany and the Netherlands and Belgium are carrying the rest of Europe right now. And there's a reason why you've got essentially zero interest rates in Europe. And it suggests that it's closer for the last 3 or 4 years. The 10-year Treasury bond in the U.S. has traded at much higher interest rates than the 10-year Treasury bond in Spain or Italy. Does that make economic sense on the face of it? No, of course not, because we know that that Italy and Spain have, if they weren't carried by Northern Europe, they probably would have defaulted already.
And do you group UK in with Europe there, or is the UK separate, having kept its own currency? And we're facing a Brexit. Are we a different case?
Yeah, the UK is a different case. And actually, one of the things that I was hoping that the Brexit team would pursue when they were talking about, when the Bank of England a couple of years ago was very forward-thinking in digital currencies, one of the things I was hoping that they would pursue was some sort of a Bitcoin standard, because that would have, in my opinion, solidified London as a global financial center. It does not appear that they're going to be pursuing that. It appears that that's all been put on the back burner. And I'm not surprised, given that the head of the Bank of England is a classic Keynesian.
Okay, well, listen, look, one other thing I heard you talk about, and you've talked about you would like Trump to deregulate the banking industry. What would the implication of that be, and would that help the current situation? Well,
what I was specifically referring to in the interview with Marty Bent is the Anti-Money Laundering and Bank Secrecy Act rules. There are actually... The Trump administration has deregulated a lot, except in the financial services industry. He's actually gone the other way. We've actually had significantly increased standards on Bank Secrecy Act and anti-money laundering. I think the Bank Secrecy Act is unconstitutional, but it just hasn't been challenged yet. And specifically, I wrote a piece for Forbes.com about the constitutionality of the Bank Secrecy Act in the context of the Carpenter Supreme Court decision that came out regarding cell phone data that said, no, we do have a privacy interest in our cell phone data. The government just can't willy-nilly collect that data. Well, actually, the original cases that it was citing were cases that from the 1970s pertaining to the Bank Secrecy Act, where all they were doing was collecting the name. I think it was literally just the name of the account holder. Well, since the 70s, when the Bank Secrecy Act was deemed constitutional, now we actually have to have every piece of information about the account holder. We have to know who the source of the account holder's money. We have to know the customers of the account holder. We have to know the beneficial owner of every asset that is owned in a legal entity instead of by a person. So we've gone so far, and the irony is that the conviction rate on the Bank Secrecy Act, I think there were some incredible statistics. I don't remember. It was something like 26 million Bank Secrecy Act suspicious activity reports are filed every year, and the conviction rate is 0.026% or something like that. I may not be remembering those numbers correctly. It's in the Forbes article, but think about the cost to the entire financial industry for having to collect all that information. Think about the privacy rights that are being impeded by that law, and then look at the cost benefit relative to the conviction rate. And I unfortunately was just made aware yesterday that Senator Grassley and Senator Feinstein, two people who are warring very publicly in the United States with each other right now, have joined together to propose a bill that would make all of the cryptocurrency industry subject to these same laws. So, it's unfortunate. I suspect that the Trump administration is going to sign that bill if that bill becomes law. But this is the sort of thing that is really putting the United States backwards and harming business across the board. I could not be a bigger critic of the Bank Secrecy Act. I also threw in one of my other interviews. I actually think it's discriminatory against women, and I'll tell you why. Because women tend to change their last names when they get married. And my hairdresser literally had an account open under her maiden name for 30 years. And because of the new bank regulations, they don't recognize, because the checks are all made to her in her married name, they don't recognize that she is the legitimate owner of that bank account. So she now has to have checks bouncing and deal with all the bureaucracy and the mess, all simply caused by this crazy law that has gone way overboard. And frankly, as a woman who has changed her name, I really do think the Bank Secrecy Act is disproportionately borne by women.
It's funny when you say that, because it also makes me think how ridiculous the drugs war is, the prison system is. Yeah. I interviewed Ross Ulbricht's mum, Lynn, and did a lot of research on the prison system and non-violent criminals being held in prison. It seems to be that there are an awful lot of laws which are pointless.
Well, it's the inexorable march to build up government power. And, the saddest thing is so many people who buy into the fear mongering that this needs to be done. How many of us gave up our rights? We just obviously, passed the anniversary of 9/11 again, and I was working on Wall Street. I used to work at 7 World Trade Center. I wasn't there that day, but boy, that was the event in my life that has changed it more than anything, precisely because of all of the privacy that we've had to give up. And, people willingly give it up out of fear. And for what? A lot of people don't really think things through, and they've been manipulated, and it's very sad.
So how important is privacy for you, Saifedean? Because you do talk about it occasionally, but you don't. It's not like something that's big for you. I don't see it come through a lot in your work.
No, I have to say I'm not particularly concerned about Bitcoin's privacy and the privacy of Bitcoin transactions, because the way that I see it, blockchain structure, the way that it functions, the only way that Bitcoin functions is through everybody keeping track of everybody else's balances. And so, the only way that I can verify that you paying me is not fraudulent, you're not double spending, is that I know all the balances of everybody. So, that's a terrible starting point for privacy, because you already have all these addresses, and then there's never going to be a simple technical solution for this issue. This is what I like to keep emphasizing: that privacy is not some magic, a software upgrade that we are going to add to Bitcoin that's going to make it magical. It's just like privacy on the internet. It's any kind of adversarial scenario where one person is trying to uncover who you are and you're trying to hide your tracks, or the other way around. It's always going to be adversarial, and it depends on how well you hide your tracks and how well they look, what tools they have. So the number one, there's no panacea, there's no simple solution that's going to just make us have privacy as a default. It's always going to be very, very hard to stay private on something like Bitcoin, because of the fact that, it relies on transparency in all nodes, and then linking identities to addresses is just always going to be complicated. But primarily, I think the real reason I care about it is that I think privacy is going to be a much easier thing to implement on second layer solutions on Bitcoin. Eventually, once these become more and more useful, they'll be far more used, and then it's much easier to implement second layer solutions. And I think the important thing, if as a person who doesn't like the idea of government spying on people, for me, the way we solve that is not going to be through scaling blockchain transactions on chain so that everybody can make their own private dark market transaction without the government tracking them. I think the only reliable way of solving it is just defunding government by breaking their money printer, and then just making it so that whatever stupid bullshit they want to do, they need to raise taxes for it beforehand. So if they want to start spying on people, they can't just print money, spy on people, and then use the money they print to tell people that that's a good thing, and then, continue to just keep this system operating. The way to fight that is to defund governments that do this. Under the gold standard, governments didn't do any of this stupid stuff. There was no war on drugs. There was no intelligence agencies going around. There weren't all these bureaucracies obsessed with what every single person was doing. You could buy whatever you wanted, and you could, there was far more economic and personal freedom back then, simply because if you were the kind of government that would waste the hard money that you have on these kind of counterproductive and destructive things to your citizens, you just didn't do well. You didn't survive, and you lost your money, and you went broke, and you were likely taken over by other governments. So I think this is really the long-run solution that I see from it. And that's why I'm not too keen or optimistic or even concerned with all these coins that pretend that, they can add privacy as a default solution to their coins. I don't see that as a fruitful avenue. I think it's just we're just going to have to kill Leviathan, and then we can have our privacy.
Well, I'm actually going to be jumping around here a bit, because a question I had for you later on, it's something I put on Twitter earlier, is that I wondered whether privacy might be potentially dangerous for Bitcoin, in that the defense against fractional reserve Bitcoins is the open ledger. But if the ledger was private, the only way you would find out if fractional reserve Bitcoin was being used would be a run on the bank itself. So I wondered I don't know if I'm getting lost here and I understand it right, but it feels like to me, therefore, privacy on the ledger is actually dangerous for Bitcoin.
Precisely. This is the problem that Zcash and Monero have specifically, which is that, in order to do their privacy technology, you never really know what's going on with the supply. It might be possible for somebody to break the supply and increase the supply. It's not entirely clear. With Bitcoin, because of the transparency, that's far harder to accomplish. And so, I care much more about the supply than I care about than I care about individual privacy, because the way that I see it is that, Bitcoin transactions are just going to be far too expensive over time. I mean, on-chain transactions are just going to continue to become more and more expensive over time because block space is scarce, and I think the demand for hard money is very high. So the increasing demand for hard money as opposed to increasing demand for on-chain transactions is going to naturally lead to scaling of Bitcoin happening on second layer solutions, because people don't need hard money. Sorry, they don't need trustless digital cash transactions as much as they would need hard money as a saving. And so I think the demand for that will be much higher. So people will prefer second layer trusted Bitcoin to first layer or second layer trusted shitcoin and government shitcoin as well. And so this is why I think, that's how I see Bitcoin scaling primarily.
Would you therefore be against any proposal to add privacy to Bitcoin?
I mean, I wouldn't, I don't know. I wouldn't dismiss that because I'd need to look at what it says and what the proposal says in general. But, there are no, technology is not, there are trade-offs. There are no such, there's no magic button to press where we just add privacy. Mm-hmm. So the way that Monero and Zcash do it is the transactions become much bigger in size. And so it's much harder to scale, and you compromise on your certainty with the supply. Mm. So obviously, in the case of introducing things like that to Bitcoin, that would not be worth it. But, potentially there will be additions to happen there. But I think, things like Lightning make privacy much simpler to implement.
Right. Okay.
Right. And if the privacy is implemented at that level, then we don't compromise the transparency regarding supply. The challenge is that we have a lot of people doing things on a second layer already, right? The custodial exchanges, the Coinbases of the world, the Bitrexes and BitMEXes and Krakens, right? They're all pulling coins into what they've built as a Web 2.0 basic second layer, and we have zero transparency into those, zero. So we lose the certainty regarding supply. For all we know, there could be fractional reserve Bitcoin happening already even before Wall Street comes in. And in fact, actually, I would point to one specific example, which is the OKEX futures loss. There was a $400 million futures default in OKEX about a little over a month ago. And OKEX just bailed in all their other customers who, by definition, had the $400 million gain, except the person with the loss defaulted. And so they basically bailed in all the other customers and made them give up the gain just to keep the exchange alive. That $400 million loss was a fractional reserve Bitcoin that was off the main, the base layer. You wouldn't have been able to detect that because these custodial exchanges are doing, they're a custodial exchange. They're keeping the Bitcoins off the chain and only reporting to the chain what they want to. And we have zero visibility into that. When Wall Street comes in, that's going to be compounded massively in scale. It's going to be the same issue, though. So that's why Lightning Network is so important, because you know that we're not changing the supply if the second layer solution that you're transacting on is Lightning.
And Wall Street is coming. I've got a quote of yours here, Caitlin. Preventing the problems is easy, but preventing them will require a sea change to how Wall Street does business.
Yep, and they're not going to change how they do business. So that's I know intimately how they do business, and they create fractional reserve interest in financial securities. That's an integral part of their business, and they're going to do the same with Bitcoin. That's going to happen. There's probably not much we can do to stop it, but at the end of the day, if you own your own Bitcoins by owning your own private keys, you're going to be fine.
Back to what Andreas always says, own your private keys. Next up, I talked to Caitlin and Saifedean about the implications of Wall Street adopting Bitcoin and the potential for a fractional reserve Bitcoin. But before I do, I have a message from my show sponsors. If you're holding on to Bitcoin and Ether and would like to put it to work without selling, then you might want to take a look at BlockFi. If you are bullish on crypto and don't have the cash you need to start a business, finance a home, pay down debt, or anything else, BlockFi can help. It's just a home equity line of credit. BlockFi gives cryptocurrency owners access to cash through the lowest cost crypto to dollar borrowing. With the largest crypto-backed lending footprint in the US, BlockFi offers regulatory compliant loans that can be delivered into your bank account in less than 90 minutes. They are the only cryptocurrency to USD lender to receive institutional investment, enabling them to provide the most affordable and trustworthy lending service within the ecosystem. And they have also created a special offer to listeners of my podcast. If you sign up at blockfi.com/whatbitcoindid, which is blockfi.com/whatbitcoindid, you can get $25 in free crypto added to customer collateral loans for under $10,000. Or $50 in free crypto added to customer collateral loans over $10,000. And applying only takes 2 minutes. Okay, this one is for my US listeners. Let's talk about stamps.com, your 24-hour-a-day, 7-day-a-week postage service. And as you know, you can practically get anything on demand right now, even my podcast. You can listen to this whenever you want. It comes out on a Friday, but if you want to listen to it next week, in a few weeks, you can do that. You can do it whenever it's convenient for you. And did you know you can also get postage on demand at your convenience whenever it suits you? Yes, with stamps.com, you can access all the services of the post office right from your desk. You can buy and print real US postage for any letter or any package, and it is available 24 hours a day, 7 days a week. You just go to the website, click, print, mail, and you are done. And stamps.com, they want to make this easy for you. They will even send you a digital scale. You can weigh your letters and packages and print the exact amount of postage every time. And I wish we had this in the UK. I send out a lot of packages, especially when I'm getting rid of old stuff on eBay. And each time I have to go down to the post office, usually in the cold and wet because we're in England. So this is definitely something I would use. So listen, why don't you go and check out stamps.com? They have a special offer for you right now. It's a 4-week trial, which includes postage and a digital scale. So don't wait. Go to stamps.com before you do anything else and just click on the radio microphone in the top right-hand corner of the homepage and then type in Bitcoin. That's stamps.com, enter Bitcoin. So let's talk about this a bit, because before I'd never heard the term fiat 2 years ago, and now I know fiat, and now I know libertarianism and Austrian economics and all these new things I've read in Safe's book and other people's things. The two new terms I've had to come to understand is rehypothecation and commingling, and I still don't fully understand it. Can we tackle each individually? Can you please explain what rehypothecation is, so I can explain to my 8-year-old daughter when I collect her from school?
It's 3-card Monty. If you've ever played 3-card Monty or a shell game with her, that's the way she would understand it. That you tell her that there's one ball, but magically that you slip a second ball under the other shell, and magically there are 2 balls. And so 2 people think they actually own it, but in fact there was really only supposed to be 1. That's the easiest way to understand what rehypothecation does. The mechanics of how that happens are very subtle. And in fact, actually, a group of 5 of us submitted a letter to the SEC commenting on Bitcoin ETFs and other fund products, like Citigroup's doing a depository receipt, et cetera, and basically cautioning that Bitcoin is a really different animal. And applying traditional clearing and settlement and regulatory rules to it are going to create some very interesting things. And there are a couple of Bitcoin core developers who signed on to that letter. And I put what I hope is a very clear explanation of what happens in rehypothecation, why you end up with multiple parties believing legitimately that they own the same asset, and it shows up on their brokerage statement as them owning the same asset. So they wouldn't have any reason, or their auditors would not have any red flag to believe that the system has created more paper claims to assets than there are assets. But that's standard operating procedure on Wall Street, and it's coming to Bitcoin, unfortunately.
Right. How is it solved then? And how would you solve it, Caitlin?
Well, I think, first of all, I've said very emphatically that no taxpayer-backed or Federal Reserve-backed financial institution should be leveraging Bitcoin. There is no lender of last resort. There's nobody who's going to bail them out. And if you choose to buy your Bitcoin that way, buyer beware, because if there's a Bitcoin ETF, physical Bitcoin ETF, and there's a run on that fund, everybody's trying to get out the door at the same time, you're going to see a massive divergence in the value of that fund relative to the underlying Bitcoin. It could be staggering in size. And then if you have a leveraged financial institution who's got exposure to that, ouch, and taxpayers could be on the hook. It's just inappropriate for any leveraged financial institution to be playing in a leveraged version of any crypto asset that has scarcity in supply.
Yeah, and I would say that's basically how it's going to be stopped. I think I don't think it's going to get as big as Caitlin probably seems to suggest, because I think it will probably die much earlier, because I don't think it's just sustainable. And so, if you remember in my last research bulletin, I wrote for about 20 pages my interpretation for why I don't think fractional reserve banking would work on Bitcoin. So I think it would be tried, but I think, first to begin with, fractional reserve banking and rehypothecation are practically different ways of saying the same thing in financial terms. So in other words, you have obligations for things. You owe people things, but you don't have enough to meet your obligations for everybody at the same time, if they all ask for them at the same time. But if they don't ask for them at the same time, you can coast along. I think with Bitcoin, it's not going to be possible to pull off something like this for a very long time, because the value of Bitcoin is extremely volatile. And so changes in it will make people's positions become extremely risky. And it's going to be primarily, I think, it's a very long analysis, and there are many factors that go into it. But the way that I see it is, the reason that it won't survive on Bitcoin for long is because of the absence of a lender of last resort. In other words, when we had fractional reserve banking with the gold standard, it was not stable. It kept on creating crises, and it led to having to abandon the gold standard by, first of all, implementing a central bank, and then secondly, getting rid of the gold standard and gold redeemability in order to keep the central bank able to support banks that were engaging in fractional reserve banking. So you can't really have a hard money and fractional reserve banking, because the bank is effectively creating new money when it creates new debt obligations. And there might come a point where it would need that money. And the only way that you could keep that bank from going insolvent is if you have a lender of last resort that is able to increase the money supply and give it to them. So that didn't work with gold, although it did work with gold in a way, because gold clearance was more centralized. And so, as I discussed in my newsletter, I think because the fact that transporting gold and moving it around is very expensive, it leads to the economies of scale of the process, mean that the person who does the clearance or the banks who handle it just become extremely valuable. And so they are able to abuse that value because the consumers don't really have many other choices. But I think with Bitcoin, it's very different. There's no lender of last resort, and it's much harder for a lender of last resort to come and do what they did with gold, because the only reason that works with gold primarily is the fact that gold was massively confiscated, and that's because it was centralized. So I think it's the decentralized nature of Bitcoin that's going to really protect it from something like this. In other words, if a bunch of banks using Bitcoin start doing something similar to fractional reserve banking, we've already seen that happen. That's effectively what Mt. Gox did. And the result was that the price crashed. The price came crashing down after the Mt. Gox crash. But actually, it's not the price. It's the Mt. Gox that crashed. That's the important thing about it. But I think we'll see things like that, and I'll see them collapse. And if a Wall Street bank is going to try it, I think it's going to get ugly. I mean, in particular, if an institution protected by the central bank wants to engage in something like this, and then they're left exposed, the central bank is going to be in a very serious dilemma, because if you let it fail, it fails and it might have systemic problems. But if you want to bail it out with Bitcoins, well, how does your Bitcoin printing operation work? Obviously not very well. You can't really just print Bitcoins on demand. You can print dollars and buy Bitcoin. But, you're then going to be buying, essentially just adding dynamite to the fire of Bitcoin, which already would be, Bitcoin would already have, if we had a fractional reserve banking collapse, then you had something like a liquidity flight towards Bitcoin, where people were dumping assets backed by Bitcoin to get to Bitcoin. So you would expect Bitcoin's price to be rising. And at that time, for the central bank to step in and try and buy more Bitcoin to meet those obligations is likely going to lead to the price appreciating a lot. So I think, nobody's going to listen to my warnings, but it's going to get ugly if they try.
Mine. Yeah.
Exactly.
No, we do. We totally agree on this one. It is going to get ugly, but I think the question is how quickly. It can go on for a while. And as you were just saying this, actually, I was thinking one of the ways that the Fed and other central banks could get involved is if they actually allocated a portion of their reserves to Bitcoin in the first place, because then they could basically do what they're doing with government bonds right now, which is set up a repo facility and repo that back out into the market so that the banks could actually get access to the Bitcoin to deliver into their short obligations. Which is exactly what they've done with government bonds, right? It used to be that reserve of central banks was exclusively gold. And then in the last, 30, 40 years, increasingly, everybody's just gone out and bought government bonds of their own government or their other governments. We all know through the IMF analysis that the central banks, that the system is net short government bonds, right? There are more people who believe they own government bonds and whose brokerage statements show they own government bonds than there are government bonds. And the way the central banks can play that three-card Monte game is that they actually are the biggest owner of government bonds and they'll just lend them out when the markets get tight. So one of the ironies, as I was just thinking through what you were saying, Saif, is if you did actually have central banks come in and start buying Bitcoin as a reserve asset, then they would have the ability to basically be a lender of last resort. But right now, they don't have those, and they certainly can't print anymore, just like they can't print any more government bonds. The central banks are not the ones who create government bonds. I can't remember who it was who said that's the fly in the ointment of how the shadow banking system is working, and the fact that we've basically moved away in the last 30 years from traditional banks creating credit to now the securities market creating credit. Instead of base money being the base money of the system, it's actually now government bonds. But the problem is central banks can't print more government bonds. They can only print more money. That's one of the reasons why I think they've gone out and bought a bunch of government bonds. And frankly, they could over time do the same with Bitcoin if they felt like they needed to.
The difference is that, government bonds settle in the money that the central banks print. Yep. Bitcoin doesn't settle in anything. Bitcoin is settlement itself. So the tricky part about them buying reserves is that if they allow banks to do fractional reserve banking and they have a hoard of Bitcoin, then they're just asking for trouble. Basically, that's like a honeypot for financial for hedge funds and the vulture capitalists to come and attack them effectively, because once the banks start over leveraging their Bitcoin reserves, they are in a precarious position where it is possible for me to go and put in a big deposit in that bank and then wait for them to start lending it out and then go and ask for it. Now they can't give it to me because then illiquid, and so then if the bank didn't have a lender of last resort, I could put the bank out of business, and I could speculate on it by shorting the stock of the bank before making that deposit. And I think this is, I discussed this scenario in the newsletter as well. This is how I see, vigilante hedge funds destroying fractional reserve banking on Bitcoin. It's going to be a massive opportunity for people to make money from it. So now imagine if a central bank is going to want to back that up with Bitcoin, it's going to be an even bigger opportunity to profit off of the collapse of the bank and off of the collapse of the central bank effectively, or at least it's running out of its Bitcoins, because you can just keep milking them at a discount by redeeming the fractionally reserved assets issued by the banks backing up the bank. So effectively, if they want to buy Bitcoin to run to back up a fractional reserve banking system, they're effectively going short on Bitcoin. They have bigger obligations on Bitcoin than they have Bitcoins, and good luck with that one.
Yeah, we agree on that. But they're going to try.
Yeah, exactly.
One of the things I found quite scary in doing my research for this, and I think you both talk about it, and it's something I wasn't truly aware of, was the shadow banking system. I think it is within your bulletin, Saif, you highlight that it was the shadow banking system that caused the 2008 collapse. What is going on here, right? Because it seems to me like this seems to be almost like the Wild West of money printing.
Yeah. It's, historically, I guess, here's how to think about it. Banks were engaged in fractional reserve banking, and that kept, under the gold standard, continued to collapse and make problems. So then they had to abandon the gold standard. And as, in order to have the central bank as a lender of last resort to allow banks to do fractional reserve banking, the central bank had to institute pretty strict restrictions on banks in terms of how they lend and what they lend and whether they can create credit. And so banking, narrow banking, deposit banking has been pretty much, neutered in terms of its ability to create money. It does create money, of course, but it's well under the control of the central bank, at least in the more advanced economies. It's usually under the control of the central banks. But then what happened after the 1970s and 80s and 90s is the shift towards the investment divisions of banks, or the financial institutions that are not banks, what is called the shadow banks, or not the deposit taking institutions that are guaranteed by the FDIC in the US or their equivalent worldwide. These institutions started engaging effectively in fractional reserve banking, or in maturity transformation, or in rehypothecation. So they were creating money. They were increasing the money supply. And over time, narrow banking, deposit banking just became a boring service that, it doesn't make anybody any money. Banks run it as a small part of their operations. But the real profit is in shuffling around hocus pocus financial obligations in the shadow banking system. And, essentially what it is you just keep working your financial magic over all of that thing, and everybody keeps buying it from everybody else. We keep all pretending that it has value. And then suddenly, if we all market to the value that we all pay for each other, we can meme that value into existence. And that's essentially how this industry has worked for many years. It's effectively, we talk a lot about government inflation, but this is similar to it. In the same way that government can finance its operations, the banking sector can finance itself through the creation of money with in the shadow banking system. But the crazy thing about it is there's no lender of last resort. There's no official central bank behind the shadow financial system telling these people, you can create this much money, and if you fall in a crisis, then we can bail you out of these terms. That's what the FDIC does for the banks, and that's how banks are kept relatively safe and stable, and money creation doesn't go out of hand. But in the shadow banking system, the thing is so enormous and so huge, nobody has any sort of grasp on how big it is, except Caitlin, of course. But pretty much, the money creation is just going on all the time. And, 2008 was the first crisis. And in order to stop it from destroying the dollar and everything, the central bank had to intervene as a lender of last resort with these financial institutions, acting towards them like they would act towards regular banks.
Do you want to add to that, Caitlin?
No, that's absolutely right. Yeah, it's and I think when Saif and I first spoke, I was encouraging him as an academic to take on the old Mystery of Banking book from Rothbard, which is an amazing book, but it is a period piece. It's outdated at this point. I think Rothbard wrote it in 1972, something like that. And it described how credit was created and fractional reserve banking worked in the system back then, but it doesn't work that way anymore. And unfortunately, Rothbard's gone. I think if Rothbard were alive today, he would have updated the scholarship to reflect the fact that the credit creation mechanisms have broadened out so much. And the traditional, tracking M0 to see how many times it's multiplied into M2 is really not that relevant anymore, because most of the credit, to Saif's point, is not created in the traditional banking system anymore.
This is a problem that is being created by experts like you, is I cannot keep up with the number of books that I have recommended. I've got two here. I've got My Debt First 5,000 Years. I've got Sovereign Individual. I still haven't finished Bitcoin Standard. I think you need to ease up a little bit on the book recommendations, because it's not going to be good for the trees. Okay, so Saif, look, I read your bulletin, by the way, which is, I just say, it's fucking incredible. I signed up and I was expecting an email, maybe like 20 paragraphs, and I ended up spending half a day reading it and kind of digesting it. And I've been through it twice now. I think everyone should sign up to it. I think it's excellent. One of the things that grabbed me in there was trying to envisage how the revolution happens. And you talk about the benefit of countries such as China, Iran, Russia being able to bypass sanctions and use Bitcoin to trade with each other, but at the same time, that would devalue their own currency. So have I interpreted that correctly?
Well, I sort of, yes, but I guess the bigger point goes back to what I was referring to earlier in terms of central banks and treasuries. I think in my bulletin I also discussed the idea about whether it would make sense for central banks to buy Bitcoin, and the more I think about it, the more that I lean towards it not being really likely. I think it's not very likely that they would do it, and primarily. It's that central banks are fully staffed with people that don't understand the value proposition of Bitcoin. And secondly, even if they did, they realize that essentially it's a threat to them. And so you can't really expect them to embrace it. And that even the central banks that make a lot of noise about rejecting U.S. hegemony and so on, the U.S., the Chinese or the Russians might talk about how much they hate having to live in a world that is unfair because it's all based on the dollar and the U.S. gets to print the dollar. So they might hate the dollar, but they hate but they like having their own government shitcoin much more than they hate the dollar. And so the problem is that, it's the same way that they've been making a lot of noise about shifting to gold, and they have increased a little bit their reserves to gold, but they won't move towards a system where they clear payments between one another with gold, or where they back their currencies with gold, because if they do something like that, that takes away their ability to create inflation. And if there's anything a government loves, it's inflation, its ability to finance itself with money printing. So they would be cutting off their oxygen supply of being able to print money to finance themselves. And I think that applies to any government. So I don't see it, intellectually and in terms of the mental models that these people have, it's very far from registering. And even if it did register, even if they did think about it, it's extremely against their self-interest. And so this is why, if the subtitle to my book is The Bitcoin Standard is the Decentralized Alternative to Central Banking. A lot of people have mistaken my book as a call for central banks should buy Bitcoin and use it. And I really don't think that is the case. I discuss it in the book, and I leave the option open. I think it might happen. And of course, it still might happen. But the more that I think about it, the more I lean towards it. Towards Bitcoin being an alternative to central banks rather than a tool that they can use. So instead of using central banks and their currencies for international clearance, now we have another option, which is Bitcoin, which is decentralized, controlled by nobody. And it'll function as a system for international clearance that is separate from an alternative to central banks. And I think the old finance and the central banks and the banks and the shadow banking system that is going to try and come towards Bitcoin, they're going to want to assimilate it. They're going to think that we're going to, bring it into the traditional financial system. I think they're going to burn their fingers by trying to play that game. And I think the future for Bitcoin financial services will likely emerge natively from Bitcoin. It'll likely emerge from people who start from scratch building things around Bitcoin that work on Bitcoin the way that Bitcoin works.
So where does the revolution kind of start? Where's the tipping point? Is this a Trojan horse?
In my mind, it's already over. We've won. It's over. So it's just a matter of you adjusting your own frame of reference for it. So it's all in your head, man. It's about thinking about it. But I mean, okay, I'm kind of joking, but the way that I see it is just that it's going to be different from the way that we view revolution and victory. I think that sort of 20th century terminology needs to go away. It's not going to be an election, and it's not going to be some politician who's going to come into office and implement a Bitcoin-based world. It's going to emerge out of individuals acting. It's going to be something that emerges out of human action and not human design. And so people are just going to start using it more and more. If it continues to succeed, if it continues to not die, and if it continues to maintain its hardness, you would expect that more and more people will use it, more and more systems and financial markets will be built around it. And in fact, I've been recently thinking that I'm going to be including this in my next research bulletin. I'm even not so sure that Bitcoin necessarily needs to have a very big destructive crash of the traditional economy for it to succeed. Everybody has this sort of idea that, the dollar is going to collapse and all of those things. And I was discussing this with Caitlin the other time. Mm-hmm. It might all end with a whimper and not a bang. If you we generally think about examples like the Weimar collapse or like hyperinflationary collapses. But I think the difference is that in those situations, the monetary system collapses and people have nothing to move to. On the other hand, what's happening with Bitcoin is that it's not that the thing that people are using is collapsing and they're left with essentially an unworkable monetary and financial system. It's that they are leaving it behind and moving on to something else. And so when it crashes, it's going to crash after people have deserted it, more or less. Or so, in a sense, I think that maybe the better analogy is to compare it to, say, when countries dollarize. So if you think about when Ecuador, when their currency crashed, and when their currency was collapsing, and then they moved to the dollar. Yeah, it was nasty while the currency was collapsing, but then once they moved to the dollar, the economy stabilized, and then products were back on the shelves, and life got back to normal because that's it. Inflation was over. People could calculate. People could make economic decisions and trade. So as more and more people move on to a Bitcoin-based world, I think the benefits of hard money and the economic boon from having harder money that is going to just benefit everybody around the world who moves into this might make it just like an economic upgrade rather than an economic collapse. And it's not even clear that debt is going to be such a big problem because everybody owes everybody at this point and everybody's in debt. And so people just move on to Bitcoin. Bitcoin appreciates. They pay off their debts, and it's not like it's not like anybody's going to be paying off their debts anyway. It's all it can all be arranged easily.
But when we talked previously, you made the good point about the British pound sterling losing its reserve currency status without a bang. I mean, obviously, it was tied into the war history of Europe, which was terrible during that period, but it ended with a whimper when it finally ended, not a bang. And the dollar just took over. And that is one scenario that could very well happen. On the revolution, though, I wanted to add, I think one of the things that will happen and is already happening in a small way is that businesses will start to use Bitcoin for transacting cross-border value exchange. And in May of 2014, started talking to corporate treasurers about Bitcoin. I was invited to speak to a mega cap corporate treasurers market, and this is essentially the Fortune 20. And I won't disclose identities, but that was one of the most amazing discussions because at that point nobody had been talking about it, and it was. There were a couple of corporate treasurers who dug in and started using it quietly. You won't see corporate America make announcements about it, or corporate Europe or corporate Asia. They'll just do it because it's in their economic interest. They have an obligation to find the cheapest way to move money. And, in small value, coming out of countries without really any developed banking system, Bitcoin has actually been that way. Now, they're not using it, to my knowledge, in, developed country cross-border exchange because Bitcoin can't compete. The bid-offer spreads are too wide, but it's going to be happening. And I think one of the things Saif said earlier that I agree with is Bitcoin is actually a high-value payment network. People actually trading the actual on-chain base layer Bitcoins, that's going to be high-value payments, not necessarily buying your cup of coffee, which is going to end up in Lightning Network, but the more liquidity we get, we've consistently held above 5 billion of daily liquidity in dollar terms in the Bitcoin market. That's big enough that cross-border payments, it's effectively the way a corporate treasurer is going to think about it, is just another currency. They're going to look at how do I route my payments so that it costs me the least. And not far from now, Bitcoin will actually be one of the cheapest, if it isn't already.
Do you know the company Wire in San Francisco?
Wire?
Yeah, WYRE. So when I was there recently, I met up with Michael Dunworth, the CEO, and they're using Bitcoin to do 6-hour bank account to bank account cross-border deposits. And they mainly representing, I think, like trading companies who have to take money from one jurisdiction to another, I think for settlement.
Oh,
yeah,
amazing.
Abra's been doing that on a retail basis as well. But yeah, I mean, I'm not talking about medium-sized businesses. I'm talking about Fortune 20 size businesses, right? In very small amounts. In one case, the treasurer said he wanted to start doing it in tiny amounts just to be able to show that they'd been doing it for a long time, so that when the regulator came asking, he could prove that this is something that wasn't new. Now, I thought that was very smart. That's how very smart corporate treasurers think. They see this and see what's coming. They just might not want to use it right now, and they certainly don't want to have their name associated with it yet. But that doesn't mean they haven't been using it. It's like when Fidelity came out and announced that it had been mining Bitcoin. I think when did they say that? At the Consensus Conference in the spring of 2016. And the CEO came out and said they'd been mining Bitcoin for a couple of years. That shocked everybody. You shouldn't be shocked when big companies come out and announce they've already been using Bitcoin. They just weren't telling the world about it.
I think it'll come from companies and businesses and individuals, and not from governments and central banks. And I think time will show how this is going to emerge more organically than people expect.
I think I've got other questions I would have liked to have covered, but I think we've come to a nice kind of natural conclusion. I've got a couple of off-topic questions for both of you, but just before I do that, do you have any closing thoughts, anything you're excited about, anything you find interesting that's coming up that we should be thinking about?
I'll throw one thing out. We are proposing a narrow bank in Wyoming that would be able, if it passes, it's a bill that has to go through the legislative process, and if the law passes, it's still going to take 6 months. So realistically, the earliest that this narrow bank could open is the end of 2019. But it would serve the crypto industry. And because it's a state chartered bank, it's not subject to the same level of scrutiny under the Bank Secrecy Act. And I think is going to help solve the crypto industry's bank account problem. It is also, Saif, you'll love this, it's going to have a 100% reserve requirement.
Yeah, I was really interested with that. And there was another story of another bank that did that, and they weren't allowed to do it. The central bank stopped them from doing it, because it's amazing. It's like the reductio ad absurdum of the monetary system, where you just have a bank that can make an enormous profit. They would be enormously profitable if they just allowed the common peasants to access the central bank's deposit. And that's it. That's all they'll do. They'll just arbitrage it away. And that's, if you think about it, all the other businesses, how many businesses do you know out there that are, they perform a business? It could be consulting, or it could be whatever it is, but it's just a mechanism for them to play that arbitrage game, to get low interest rate and pass it on to their customers. And you could think so much of modern business and so much of modern work in a modern fiat-based economy is just bullshit. It's just make work exercises so that you could get low interest rate credit and then pass it on. And I can't wait for a Bitcoin-based economy or a hard money economy to happen in my lifetime, so that we get a very thorough accounting of what jobs in the bullshit world in which we grew up, what were the bullshit jobs that won't survive into the future.
Well, and then the bank you were alluding to was the Connecticut bank that was just going to pass on the interest on excess reserves, which is right now 1.95%. It's a lot more than anybody could get, from a base classic bank deposit. They were just going to cut out all the middlemen. So, and interestingly, the Fed denied the application, and that for 2 years they were going back and forth until finally this lawsuit was filed. The Fed doesn't have the right to deny it, but they denied it anyway. So because of that, our Wyoming bank is not really trying to arbitrage the interest on excess reserves. That's not what we're trying to do. We're just trying to create a money warehouse, 100% reserve money warehouse. Classic like the gold warehouses. You have to pay fees for storage of your money, but you're not going to lose access to it. And the Fed would have to grant the master account under federal law, and we actually, because of the Connecticut situation, have put into the draft bill a requirement from Wyoming's Attorney General to sue the federal government if the Fed doesn't grant the the master account within 6 months of application. So again, none of this is final yet. We've got to go through a legislative process. It may fail, but we're trying to do something really special. And I think it's going to help the industry. It's going to help the state of Wyoming. There are a lot of industries that are not politically correct that are very big in Wyoming. Tyler Lindholm likes to say we do coal, cattle, and crypto. Well, pretty much those three industries are not politically correct. And also I would add there's a fourth, which is the gun industry. And all of those industries have been targeted by the banking system. They're losing access to their bank accounts. And frankly, this is going to help. This concept isn't going to be crypto specific. It could be for the coal industry where Bank of the West just pulled out of banking. Just one day they just announced we're not going to bank coal companies anymore. So a bunch of Wyoming companies lost their bank accounts.
Oh, really? I did not hear about that. Is it because of global warming hysteria?
Yep. If it's exactly right. And Citi pulled out of banking, the gun industry, right? So, I mean, this is what's happening to the crypto industry with regard to getting access to bank accounts for basic businesses, for basic expenses like paying your vendors or paying payroll if you got to pay your employees in dollars still. This has been a major issue, and it ties right into what we're talking about not having fractional reserve banking. This is going to be a true money warehouse that is not going to be making loans, and it's available for businesses only because it's not going to be FDIC insured. It would be businesses only. And just again to reiterate, it's not the law yet. We know we have a tough road. We know the banking industry and probably the federal agencies are not going to like this. But Wyoming's the kind of state where we don't shy away from fights like that, and so we're going for it.
It's funny. I've been rejected by 5 UK banks for a bank account for my crypto business. I don't actually have a bank account right now for it, and I took my first advert for the podcast recently, and I'm part of the Let's Talk Bitcoin network, and I had a payment into my account from BTC Media. The next time I logged into my account, I had a form I had to complete with who is my employer and what do I earn.
Right. Yeah. Yeah, well, and there was just a bank that lost access in Wyoming, a company. It's a trade association that lost access to their bank account. And, the banking industry it's not necessarily the banks. Again, it's the Bank Secrecy Act and all the federal laws that are the issues. But because of the U.S.'s reach globally, they've basically put pressure on all of their global partners, which is why you're seeing it happen in the UK as well. It's the same thing. And it's this crazy Bank Secrecy Act. It is harming commerce, not just in the crypto industry. But this is why I hope that this industry prepares itself to take on the constitutionality of the Bank Secrecy Act. I think that the constitutional challenge can and will come from this industry. I hope that some of the players of significant means will step up and support whoever actually wants to litigate that, because it's time to test this and get this heavy weight off the shoulders of commerce. It's the weaponization of the financial industry is unethical, and I think it's we're shooting ourselves in the foot in the United States. But again, maybe just to wrap it up, I haven't said this yet. Bitcoin is what makes me so optimistic. You don't see me so pessimistic and saying, "Oh, the sky's falling and things are going to crash, and you should be spending your life thinking about, building a bunker." I'm not saying that at all, because we actually have a way to opt out of this crazy system, and that's Bitcoin. That's
a very, very cool way to end it. But I do have a couple of final questions for you both. Firstly, Caitlin, are you a carnivore yet?
Yes.
Full carnivore.
Full. Yeah, I grew up on Wyoming beef. Yep.
No, but are you like these guys, nothing but meat?
Oh no, I eat vegetables too, but mostly I'm mostly a paleo diet. Yeah.
Okay, that's a good start, Caitlin, but we need to work on.
I didn't realize a full carnivore. Okay, yeah, no.
Yeah, so I was a vegetarian up to about 3 weeks ago, and I'm now having ribeye for breakfast. So
my God.
I've been shamed into it by you and Pierre and Bistine. Caitlin, also, who is going to win the Premier League this year?
Liverpool.
How are you feeling about it, Saif? How do you think? Do you think we got it?
I'm feeling really great about it. I've never seen a better Liverpool team in my life. I started watching ever since they stopped winning. I've never seen anything this good. And it's quite an amazing team that Jurgen Klopp has pulled together. It could be something really, really special. Like we could win many trophies. I think it's going to be a team that will be remembered for many, many years from now.
I think we deserve it. Caitlin, if you're ever in London, I'll take you to a Premier League game. And my final question is for you, Saif. I've got a question for you. So when I was in San Francisco, I was at the Museum of Modern Art, and my perspective on art has slightly changed. I've actually taken a photo, I'm going to send it to you, was some plastic bottles hanging off some string. But my question for you is Rothko good art?
No, it's not. I mean, I'm not an artist and I'm not an art critic, but I think I have one simple metric, which is if it can be recreated by somebody in 15 minutes, then it's not worth paying attention to. If it's easy to do, if it requires no skill, if it requires no time, and you have to spin some story about how it represents something or the others, then it's just pretentious bullshit. Build something hard and then try and spin a story about it. But of course, when you build something that's hard to build, you don't need to spin stories about it. You don't need to talk about it. Beautiful art just speaks for itself.
Yeah, see, Rothko is the one area I disagree with you, because there's a Rothko room at the in Art Museum in London, which I've stood in and I've looked at it thinking about you, and I still disagree. So I'm going to disagree with you on Rothko.
Oh,
this has been absolutely...
We'll have something to disagree about.
Yeah. Well, no, but I want to thank you both because you do so much. Thank you for coming on this and helping me with my podcast. Just can you let everyone know how to stay in touch with you? And I will obviously share that out in the show notes.
Well, for me, mainly I'm on Twitter, but I'm also active on, several other podcasts all the time. But you can find my website also, saifedean.com, or Twitter. My handle is also Saifedean. Saifedean, just know the spelling of my name, and you can pretty much find me on many different places. And
same for me, at Caitlin Long _ on Twitter. Also, I'm pretty active on LinkedIn as well, and my website is caitlin-long.com. Also a contributor on Forbes.com periodically, so, but I always link everything back to Twitter and LinkedIn as well as to my own website.
Okay, what did you make of that? Did you enjoy that? Did you enjoy that as much as I did? God, I was so nervous going into recording that. They are both proper heavyweights. The depth of knowledge they have on their subjects is pretty amazing. It's so out of my depth. I was working in advertising a couple of years ago. I didn't know anything about economics or Bitcoin. So I was pretty nervous, but I think it went well. I hope you enjoyed it, and I would love your feedback. I would love you to tell me what you think. And also, if you really enjoyed it, I'd love you to share it out so other people can hear it too, because I think it's a really important episode. I also got to say big thank you to both Saifedean and Caitlin for coming on. I really do appreciate them giving up their time. They're both obviously very, very busy. So thank you to both of you. Okay, so please do support the show very quickly. Become a patron if you want to. If you want to help support the show, you can do that on patreon.com/whatbitcoindid. You can leave me a review on iTunes. A 5-star one would be super helpful if you think it deserves it. You can follow me on social media. I'm at whatbitcoindid everywhere. You can check out my website, which is www.whatbitcoindid.com, and you can share this show out with your friends and family. Any support you can give the show is hugely appreciated. And lastly, just a big thanks to my engineer, Jason Camiola. If you've got any audio engineering needs, please do get in touch with him. His details are in the show notes. And big thanks to him for what he does for me every week. Listen, I hope you all have a really great week, and I look forward to catching